Going on, everybody? This is Economic News Insights, and today we're going to talk about why most people lose money in crypto when they're new. So, what is it that people are doing when they're getting into the market that is causing them to lose? I'm going to give you 5 habits that, if you can get these under control, you're going to have more prosperity more than likely with your investments in Bitcoin. This can apply to any market, though. I mean, these are universal principles, habits that work across multiple economic platforms. So, if you guys are new here and you like videos like this, crush up the likes. You can see we've made plenty of videos talking about stocks and crypto. But let's get into it. First and foremost, we're going to talk about Bitcoin. Right now, it's about to hit the next all-time high. So now's a really good time to talk about this because as it stands, people always FOMO when Bitcoin hits a new all-time high. We're going to talk about FOMO, which is fear of missing out, and how you can avoid in the future getting into situations where you're FOMOing. So the very first thing that people do when they get into the market and they buy is when the market starts to recede, it starts to go down, they panic sell. They're scared. They think that the market's going to go to zero. They think that they're going to lose half their wealth. If they put in $500 and it goes down to $350, they start stressing out and they start becoming concerned. And then when it goes to $310, they're like, oh my gosh, if it goes any lower, I'm going to lose all my money, and they sell. And then sure enough, a couple days later, a couple weeks later, it starts to go back up again, and then they wish they had held. This is like the most common thing that I've ever seen with people who had ever invested in Bitcoin. I mean, even if I show you on the charts the volatility of Bitcoin, what goes up must come down and then go back up again, right? If we just look at the history of Bitcoin, you could see it goes up, goes down, goes up, goes down. See, this is why you don't want to chase the pump. You want to always buy when it goes down. So what they could be doing when they're selling is if it goes a little bit lower, buy back in, maybe more purchasing power. Although it's really difficult to catch a falling knife, people do try to do it. Best bet is to hold. I remember when I first got into crypto, everyone just said hodl, HODL. It was like a running meme because it was an incorrect way to spell hold, but hodl. All I needed to do was hodl. It was the best advice I ever was given. I bought back here in 2016 and have been holding ever since. And I have no regrets about it. Even when it did all this. I mean, don't get me wrong, this time right here was quite brutal. So was this sell-off right here. This sell-off was actually probably even worse than the 2021 sell-off. Although if you look at the chart, the 2021 sell-off looks worse. I'm just saying, I'm used to it by now. We're used to it by now. You just hold. It's patience. It's a patience game, my friends. Next thing is FOMO. Say no to FOMO. So as you guys are getting into crypto right now, as the market's going to pump, people are going to have fear of missing out. So what are they going to do? They're going to buy at all-time highs. When should they have been buying Bitcoin? Well, they should have been buying when it was on the dip right down here in around 78, 76,000, trying to buy on sale. But what's going to end up happening is people are going to try to jump back in now that it's 106, and then they're going to chase it, and it's going to go to 110, 120. Who knows how high it's going to go? Again, this is not professional financial advice. I don't have a crystal ball. I'm not a Swami, and I can't tell the future. We just know we can forecast based on charts how the market's performed. Always important to put that out there so you guys know. But as the market moves, we can expect volatility. You can see there is volatility in the charts. All assets are volatile, whether it's stocks, housing market. Some assets have less volatility. Gold, for example, doesn't have as much volatility. Stocks doesn't have as much volatility. Housing market, not as much volatility. But Bitcoin, a developing asset class, lots of volatility, lots of panic selling happens, lots of FOMO. So try not to chase it when it's going up. The best advice I can give you aside from hold is buy when there's panic on the streets. As Warren Buffett says, buy when there's blood on the streets. So when everything is carnage and there's blood everywhere, red everywhere, you see the charts are red, that's when people buy. Even with the stock market recently, prices went down. I remember around April 7th, what was I doing? I was buying. I was finding money to buy. I didn't know how low it was going to go. It turned out that was like the bottom. I'd been buying since probably around the 1st or like late March, I'm sorry. But it ended up working out for me because things went back up. I didn't know it was going to be like a straight V recovery or maybe even an I recovery. I mean, it was a real quick sell off and then back up again. This is something that's new to the markets. We saw that in 2021. But anyway, fear of missing out happens. You buy the top, you buy close to the top, you chase it. That's just never when you really want to buy. You want to buy when things are on sale, but you want to buy good assets. That's what we're going to talk about next, right? So what it is you don't want to be over leveraged. So here's a big thing. What that means is you put in more money than you can afford to lose. So you have too much money in the markets. When the market is going up, you're looking good. Your portfolio balance is rising. But then when it goes down, you're like, oh my gosh, I got to get some money off the table. So what you do is you take all your money out and then you kind of panic sell because you're over leveraged. Whereas if you put in more money or enough money that you can afford to lose, like don't, over leverage yourself. Don't put in things like your kids' tuition. Don't put in like, your rainy day fund that you're like attached to, that if anything happens to it, you're going to be an emotional wreck over. So don't get me wrong. Everyone, especially as their balances go up, they get more exposure, but you still want to have that rainy day fund on the side. But never invest more than you can afford to lose. You can see carrying too much debt when compared to its operating cash flows and equity. That's another thing. People take out loans to get Bitcoin. I don't recommend any of that. That's just too risky, especially if you're new to it. But like they're saying with a company, never be over leveraged. Same with your financial markets, okay? Now, the next thing is stability over hype. So when you're picking projects, look for projects that have more stability. Like Bitcoin. Bitcoin's more of a stable investment. Over time, we've seen that it continues to go up. Whereas if you go to some of these other cryptocurrencies, you may find lots of volatility that can, make you disenfranchised or feel bad about being in the market. When projects sell off, if they're not very strong projects, right now as it stands, Bitcoin's been that strong crypto. All the others have been all right, but I would say there's like levels to this. There's Bitcoin, which is the standard, which is the one that continues to consistently go up. And then there's altcoins, which are like a level 2 with like Ethereum. Ethereum has been good, but it has also been underperforming and not quite delivering on what everyone expected. Not saying it's not going to, because everyone believes, or a lot of people in crypto believe, that Ethereum's day is coming where it's going to really surge. We'll see what ends up happening. But I mean, that's speculative investment. Some would say it's an investment. I would say it's more speculation. But then you have like level 3, which is more gambling, like, getting into low cap altcoins. We'll talk about some of those later, but those are like, I would say even the Trump coin. I got some Trump coin. I have like 40 Trump coins, but I'm not like attached to it. I mean, if it goes to $20, I might just sell it all and just be happy with my gains and then put it into something else. But that's like my gambling fund that, I'm trying to look for like the next 50x or the next 100x, but most of my portfolio is not gambling. It's consistent, strong growth with Bitcoin and top altcoins like Solana and ETH. I can get into a video talking about my portfolio as it is, and I often restructure it. And sometimes the reason I restructure it is I'll take tax losses. They call it tax loss harvesting. I use software for that. They'll have something in there. If I see the coin isn't very good and I could take a tax loss on it, I'll take the tax loss, get out of that coin, and then just hold into Ethereum or into Solana or into Bitcoin, and then I'll recalibrate and jump back into something. But what that does is it gives me tax loss to write off in the future when I do get my money back. So don't be scared to cut ties with coins or projects that are not doing much for you, especially if you can harvest tax losses. Get into something that's moving a little bit harder. I had this happen kind of with Polkadot. I was riding the Polkadot wave for a long time back when it was like around $8 or $9 earlier in the year. And then I noticed that Polkadot was just dying and dying, like fading off. I mean, we saw it around here. It was like $10.39. And then I started to sell off into January, and I cut ties with it around like $7. And I'm glad I did, because I got into something that was moving up. So I got out of Polkadot and I got into something. I think I got into Solana or Sui, or in some into Bitcoin. But if you see something downtrending and it looks like it's downtrending, I would say swap it for something that's a little bit more stable. Like you could go into cash, but cash doesn't necessarily grow. So what you're trying to do is get out of something that's dying and get into something that's stronger, like Bitcoin or maybe ETH or Solana. And I'm not saying that Polkadot won't recover, but that's the danger in getting into altcoins is they go down fast. They also rise quickly, but when they go down, sometimes they stay down for a long time. Polkadot's one that's been doing that. The last thing that we can talk about is what you need to know to invest in crypto safely. So security over your coins. You need to have proper security. If you're going to do on exchanges, whatever exchanges you're going to need, because you're going to need exchanges to buy, sell, and trade, right? So on there, you should have 2FA. I would say on Coinbase, they have vaults, they have staking, something like that makes it a little bit safer for you to hold your coins, okay? But people say cold storage is the best, but the problem that happens with cold storage, people get a little bit of Bitcoin, they put it on cold storage, and then they forget where they put their security seed key or their security key. Some people, they just put it, I don't know, they put it in a book. They write it down, they put it in a book, and then they forget that they put it in a book and they can't remember the book they put it in. It's on the bookshelf and they got to go through all the books because they're looking for the place where they put their security seed phrase. So make sure you don't lose that if you're doing the cold storage or a wallet. Make sure you take the necessary steps. So whatever you do for security, go onto YouTube and watch a couple videos of how to properly do it. So how to properly secure your cold wallet, how to properly secure your hot wallet. Cold wallet, hot wallet, we can make a video about that, but in summary, cold wallet is something that's not attached to the internet unless you plug it in. So once you detach it, it's cold, can't be touched. Hot wallet is something that's always on the internet, it's always connected, it's hot, it's a hot wire, okay? Cold wire, not active until you plug it in. And then there's exchanges, but if you're looking for security for an exchange, how to secure your Coinbase account properly, how to secure your Binance account properly. You want to know all this information. You want to get that information, and you want to know how to do 2FA. You want to know how to do backup security phrases and seed phrases, and that's really important, right? So hopefully this video helps you guys not make some of the same mistakes that I personally have made, or maybe that you've made in the past. Now you're going in and you're taking a moment to recalibrate and see how you can do it a little bit differently so that you can get the success that you're looking for. But I would say, in summary, buy strong projects. Okay, if it's a stock market, Apple, Google, Meta, those are the strong projects, right? In crypto, Bitcoin, Ethereum, maybe those are the only two, but Bitcoin being the standard as of right now. And patience. So getting in top projects and being patient. That's the key. Those are the keys right there. Nothing's guaranteed, but also don't invest more than you can afford to lose, because when volatility comes, and you can expect volatility, you're not going to get shaken. They say shake out the weak hands. And then they say the people who got the diamond hands, those are the ones who ride the wave all the way through. They go up and down and then they go back up again. It's like a roller coaster. They don't just go up and then they go down and then they sell and they're like, I'm out. And then they miss out on the next leg up. So see you guys on the next one from Economic News Insights.